So, welcome back. So let's start our interview. First question. We spoke about 4 months ago. In a few words, what has changed? What has happened since then? If it is possible to say that in a few words.
Good to be back, Victor. The whole geopolitical system has totally changed quite dramatically. I think in the last 4 months, this military situation in the Straits of Hormuz and the AG has been the largest impact globally. Uh, However, for us as Vantage, we actually concluded the purchase of PJ Marine, which is a company which has divisions in Singapore, Hong Kong, and Shanghai. We had an opening ceremony in, I think, just about a month back. So the expansion plans for us have started, and it's going according to plan. Now it's to this whole problem with the geopolitical tensions inside the Arabian Gulf has actually created a new dynamic, new spin that we weren't actually aware of while we were planning this whole IPO.
Okay. So let's take it step by step. It may be better. So first, how has the outbreak of the war in the Middle East and the closure of the Strait of Hormuz impacted your business? Was it good? Was it bad for your company?
Okay, so when it first started up, the Straits of Hormuz wasn't actually closed. So with uncertainty, you have a great increase in freight rates. So at the beginning, when the Straits of Hormuz was not closed, it was actually not bad. We were making more money at the initial phase. However, once the straits closed, supply dried up. So when there's no oil moving, of course, there's no need for shipping. Um, in the interim, you started seeing regional flows in Southeast Asia going towards Australia, New Zealand, and more like a scramble to get enough oil just for the interim term. Uh, that allowed the regional flows to actually increase. But now I think it's almost two months in after the Straits of Hormuz has closed, or maybe 1.5 around there. But I'm currently in Dubai, and I would say that although there's not much like real physical impact on day-to-day life, it's a lot quieter than it used to be pre-war, so to speak.
And you have recently made some acquisitions, correct? You actually just talked about one of them. What acquisitions were these, and why were they made?
So we actually started with a very logical mindset. What we wanted to do is bolster our position in Asia first, and then expand and bolster positions globally. So what we did was we saw a opportunity where PJ Marine was already a existing brokerage shop which was running for over 12, 13 years. And there was a very high levels of synergy between PJ and Vantage on the chemical space. So with that merger, what we did was we actually increased the strength of the chemicals shipbrokering in Singapore. And it also allowed us to gain access to the China market through PJ Shanghai. So that also covers the Hong Kong side as well.
And why is the China market so important? I mean, I know it is very important, but can you give us a little color about that? What's the potential here?
Okay, so the fastest growing market, very simply, right now is the chemical market. And also, of course, biofuels, which is biodiesel. The environmental movement in Europe is actually pushing the increase in demand for biodiesel. Now, with the oil prices being what it is right now, I think you're going to start seeing biofuels becoming even more prevalent. compared to before. Before it used to be a luxury to have biofuels. So now, slowly by slowly, it becomes cheaper in comparison to what it was maybe 6 months ago, when oil was at $50 a barrel. Now oil's at $110 a barrel. So it's just got 120% increase compared to before.
So people will start using more chemicals because oil just went a lot higher, right?
No, I would say before you would see the oil going just through the normal refining process, but now you're probably going to see the development of oil to chemicals. There will be always going to be a need for chemicals because you need solvents, you need aromatics, you need basically all the polymers all the plastics, polymers, that everything is just made out of plastic. Your iPhone has a lot of plastic in it as well, right?
So you are now entering the petrochemical space, so to speak.
No, we were already in it and we were quite strong in it. But this is just making it even stronger for the Asia Pac region. The main thing and the main benefit is the access to China. We start off with the petrochemicals, but the main goal at the end of the day is to get into the sale and purchase and the new building space. Of course, this is not going to be something that can be created overnight. It'll take a bit of time. But what we believe is if you have the capability to have a existing office in Shanghai, which has already had a presence for over 10 years, it's better than just going in and trying to do it organically and starting up fresh with just nobody there.
Of course. And how much of your current revenue today is related to chemicals, not tankers?
Petrochemicals is still shipping for petrochemicals. That's how we divide it. So I would say probably it's one of the growing segments. It was about 15 to 18%. Now it's probably going to become like 25% to 30%. Of course, we have nothing is a static graph, so to speak. If one increases, the other might go down. If suddenly the Straits of Hormuz opens, you probably will see increase in crude flows going out. Then the whole dynamics shift again.
Okay, so about 20 to 25 of your revenue will benefit from that scenario, right? And the China exposure only increases that part of the business. In summary, the petrochemicals will grow over the next 1-2 years, and because refining is not solely dependent on the Arabian Gulf. Once you get your crude and your naphtha coming from a different region for the feedstocks for the petrochemicals, your output will be continuing. But right now, you're getting supply disruptions across the world because of lack of feedstock. So you can't just magically change it within 1 month from A to B. It takes time for the shipping. It takes about, say, 30 days for the shipping. And also consistency of resupply for that refinery will also take time. Okay, interesting. Moving on, Vantage Corp is already present in Singapore. So, why acquire PG Marine Singapore? What advantages or gains does it bring to your company?
So PG Marine has basically focused on the specialized segment of the tanker space. Vantage as a company has been covering the whole oil barrel, all the way from crude down to dirty products, CPP, which is clean petroleum products, and then chemicals, which is classified in specialized. So this segment, we say before we had like say 5 brokers or 4 brokers. Now we suddenly increased it to 10 brokers. So of course there'll be an immediate boost in revenue for that department.
In terms of revenue, how much do you estimate each of these new acquisitions could generate? The China one and the Singapore one. What would that mean in terms of revenue? Do you have any idea?
Look, it's already been an existing business. So when we actually purchased it, we already knew what the last 3 years were doing. And based on that, if we did nothing, like if we didn't actually improve it, if we didn't add more people, didn't add anything to it, we were already seeing a revenue increase of about 3 million. 3 million, maybe on a bad year, maybe 2.5 or something like that. That's the baseline which we were actually seeing, but considering when we were actually purchasing it. But the main idea is to actually look at what is the intrinsic value that is not actually in the numbers. It's the synergies that where 1 + 1 = 3. That's what we were trying to actually optimize on.
And could you talk about a little more about these synergies, about the synergies you were seeing in the acquisitions?
Yeah, I mean, look, having 2 companies, having 2 offices with 2 rentals, 2 servers, everything is doubled up on the cost. Once they came into our office, we automatically reduced the cost. So consequently, profitability for that division will go up. Now, operational integration plus IT, which is technological integration, efficiency will go up as well. Now, the communication spheres of one division of 4 brokers compared to a division of 8, 9 brokers, the reach of that one division will actually increase as well. The number of people one person will know will probably be less than 10 people will know. I mean, this is just basic logic. So all these synergies will add up, and we're already seeing quite a good integration so far. It's been since January on the merger in Singapore. And what's it, 4 months or 5, almost starting on 5 months, and we're quite happy with the whole merger so far.
And how much did these acquisitions cost? Both the China and the Singapore. Were they paid in cash?
So basically it was all cash deal because we didn't want to actually complicate things with a stock component to it. And we just came out of raising money on the IPO, so we thought it was the most prudent way of actually deploying the IPO money rather than just buying a new car or something like that. So we bought PJ using the cash from the IPO proceeds, and with that, it cost around 2.4, 2.6 over 2 years. So you pay half now and then half after a year. So this doesn't put a lot of stress on our cash flow, and it also allows us to integrate PJ quite well.
And in the first results, we will already see the numbers from these new acquisitions, right? In the first
not all
results.
of it, but you'll probably see a few months worth of it. It's not going to be like the whole shebang. You'll need probably to wait until November, I guess, to see the probably 9 months or so. Because right now, once we finish our review on the quarter, like the biannual earnings, we will be looking at probably only 3 months in. because our financial year finishes on March 31st.
But the Singapore acquisition is already generating revenue.
Yeah, of course.
So shouldn't it already contribute to revenue already in the
Of
first
course.
quarter?
Yeah, but it's only 3 months, right? We only completed the acquisition on 1st of January or 2nd of January. So if you look at maybe 3 months of the revenue, 3 months of the net profit, then you can extrapolate it because that's what we can declare. However, we can't actually be 100% sure it's going to be the same. It might be 10 times better. It might be worse. But mathematically, shipbroking is not going to have that much of a big variance if all the brokers are there, everybody's doing the same job.
You also opened a branch in Dubai, correct? Which is where you are now.
That's where, yeah.
And how is it performing? When did you open this branch, and how much do you still have to develop there?
I mean, Dubai has been a work in progress. I've been here for about 2 years. One of the main benefits of Dubai is actually the proximity to all the cargoes, which unfortunately right now has kind of dried up with this whole conflict in the Arabian Gulf. Now, it doesn't mean that you cannot have access to, say, West African markets or say, Mediterranean markets. It's just a lot harder to actually try and break into that without the expertise that that we already possess. So I would say everything's on kind of pause for right now, just to see how the geopolitical tensions unwind. It's kind of pointless to try and do anything when everything is so uncertain. Even if you go to one of your competitors or even a broker in another shop, for example, I don't think they would be willing to change right now in the middle of all of this. So change is not easy. We didn't expect such a drawn out kind of a military action in the Arabian Gulf. We thought it'll be like 1-2 weeks and everything will be back to normal. But I mean, it kind of surprised us on the whole actions of both US, both Israel, and the whole thing was a complete surprise. And it's also reflected in the oil price, right?
You were also planning to expand into North America and Europe, correct? Should we expect this movement to happen in 2026 still, or that would be for the future, for 2027 or 2028?
I mean, ideally, I would hope still in 2026. But I mean, one can dream about a lot of things, but the practicality of it, I'm not too sure. It really depends on, are we going to be in a war zone for the next 6 months, 8 months, 10 months, or is it going to end within 1 month or 2 weeks? So all this uncertainty is where it actually creates different spin on all the problems that we have. Why would a person want to go through a merger when they are having quite a steady, certain revenue stream? Unless they see a true benefit to both parties where 1 + 1 = 2.5. So everybody wants to make more money. They don't want to be giving out less money. I mean, it's a basic logic. So the value propositions right now are becoming much more obscured by the uncertainty. And that's a new dynamic which we actually have to deal with, at least for the next 6 months or so.
Moving on, I noticed that most of your contracts are spot contracts based on your earnings presentation. However, I also saw that you apparently plan to have more term contracts signed. What is the rationale behind this? What's the strategy? Could you comment a bit about that?
Yeah, I mean, if you actually look at it, it's quite simple. If you We already hired a few more brokers on the project side, which is like time charters and sale and purchase. So a spot contract is like taking an Uber from downtown to mid-town, and you pay the Uber fare, and then we as the broker get a commission. Now the term contracts is like I go to a car rental shop and say I want to rent a car for 1 year, and then we get paid on a daily commission for the whole year. So this is kind of like a recurring revenue rather than each time the broker has to go and keep getting new cargoes. So recurring revenue is actually a very good measure of how we can actually stabilize long-term cash flow, keeping all the underlying costs, which is like rental, computers, et cetera, uh, already absorbed by the recurring revenue. So if we have a long, say right now, our projects book is growing. So if we can actually grow it to say 200, 300 ships just on time charter, then I think everything else becomes very, very easy for the whole company. We can just grow very fast, actually.
How much has Vantage Corp spent on acquisitions and building your entire ecosystem? How much has the company already invested on creating itself? That's my question. Do you have any number in your mind? Because I'm trying to compare what it takes to create a company like yours. I'm trying to compare that to your market cap.
I would think just take, for example, IT, the operational optimization software that we built. That alone, we've spent over 1.5 around. I mean, the product itself costs maybe 1.3 on valuation numbers, but the amount of time investment easily about 3 mil, just because you can't actually price in time into a valuation. So I would say just the IT alone, we have actually spent quite a lot of money and time developing a software which will improve the efficiency of our company. Now we just spun off this company. It's called Hado. And what we're trying to do with this company is to offer IT, this IT program to the.
Is this the technology division?
Yes, correct.
Oh, okay.
So just looking at that, for me, I always believe if you just only reinvest all your money into one side, yes, you'll make more money, but you won't be able to stay relevant in the long term across all divisions. So you always have to invest in technology because you have a 1 year, 3 year, 10-year plan, and technology is going to be part of the 3 year to 5 year, that kind of plan. And if you don't invest anything, you won't even be in that game plan, so to speak.
So, and what about the acquisitions? How much was already spent there?
It's, I mean, I would say 2.5, 3 mil roughly. then IT still has a burn on the development, etc. I've already said that in the F1 as well, that I will be deploying about 20% of my funds from the IPO into the IT development of the software platforms. Then eventually now with AI, we're just trying to see how to get a well-developed relational database so that we can actually integrate all the AI functions on natural language into the IT segment as well. So it's a very interesting, it's a very niche case of utility for the IT arm, because no one really actually, I mean, if you think about it, how many people actually know what a shipbroker does? And how how many people actually know what's the data points for a shipbroker to use? So it's a very interesting dynamic and niche market that you're actually targeting.
Is this division already generating revenue?
No, because we just spun it off a few months ago. It was an internal arm of Vantage, but in order to make it able to create money, you needed to segregate it from Vantage Group and have it at arm's length, so to speak.
So to create a subsidiary that is
Correct.
only dedicated to the technology side of the business.
Correct. Then it becomes much more clear on accounts of Vantage Corp, where is the money being deployed to, how, rather than you have it seen only in one segment, the money becomes much more clear to the investors as well. So the main goal of all of this was to actually make it as clear as possible to the investor, how are we utilizing our money? And what's the underlying bottom line of cash flow? Where's the cash positions at? So that's why we were doing a lot of restructuring over the last few months, just to make sure that going forward, everything would be fairly smooth, clear, transparent, and hopefully that will bolster investor confidence.
Okay. Now, still about the technology side, how do you plan now to sell this technology?
So the most logical way would be to go to, because the industry itself, it's not like it's very hard to say that if you've been in it for long enough, it's very hard to say that you don't know everybody. There will be probably 3 degrees of separation, where you probably just have to speak to one person who speaks to another person, and you probably get to one of the clients that you need to speak to. But I would think the more logical way of going about it is the clients that you already are fixing, working with, you go and speak to them, and then you try to build an interface together with them to make their lives easier. And with that, you can actually add more value. Now, the main problem is there's 3 different ways of actually branching out. One is to sell the same program to your competitors, but most competitors will say, what's in it for me? Yeah, so that's why I created the new company. It's the maybe even give them a piece of it as in stock in that company, so they have skin in the game.
Very interesting. Because if you are a competitor, if you are my competitor, I don't want to use a platform that gives you my information.
Correct.
Right?
However, if I give you 10%,
yeah, I may also start trying to sell your product, right?
yeah. So I mean, it's still in my head on what's the best revenue model, because it's still early days on how to sell it, how to gain traction in the market. What's the best model, so to speak. So I don't want to rush into it so far because once you make certain decisions, it's very hard to unwind them once it's made. So a bit of prudence is needed. But once you can actually scale it to a certain level, then it'll be very interesting.
Okay. Because it will be quite easy to scale, right? I mean,
Yeah,
to generate a lot of money.
There's a lot of IT companies who claim that they're going to be big, but they didn't even have anything more than a white paper. We already have an existing product which is already working in our company. Now it's just to use that same application to others. It's a very different apple.
And sorry to spend so much time on this topic, but how does the software you've developed gives Vantage Corp more efficiency?
Okay, before this, fixtures information, like contract information, was on one Excel, which was take it as a database, so to speak. Each division, chemicals would have its own Excel, CPP would have its own Excel, DPP would have its own Excel. Finance would have to go through 3 different Excels to update it. Operations would be on a different Excel or a different database structure. So then none of these databases actually spoke to each other. Now, with this operational software, I've just put everything together, which is all the departments, all the working departments in one program, operations in the same program, finance in the same program. I can even I can give rights to auditors to actually audit contracts through this platform with view-only rights for certain files. So it increases the efficiency because it built a relational database in one location. And me as a manager will be able to see performance indicators for each broker. How much revenue did one broker make? How much? What's the utility of an operator? What's the aging lists of my demergent claims? What's my client ratios on, say, how much am I fixing on CPP versus DPP versus chemicals? All the metrics as a manager actually become much, much easier rather than trying to deal with 3 Excels which don't talk to each other.
Final questions. If I'm not mistaken, Vantage Corp repurchased 1 million shares at the end of last year. Correct?
No, we started a buyback program for $1 million. So during the course of the year, we've actually steadily bought back, I think, I'm not sure whether I'm allowed to disclose the value or not, but we've steadily bought back through the year. And hopefully in the next few months or so, we should be able to complete it on the for the whole tranche. We're committed to buy back stock because we feel that the stock is heavily undervalued. And if we don't see any improvement in the stock, we might actually keep on doing this as time goes on. But the whole point of listing is not to buy our own stock back and give the opportunity to others to buy it. So this is where it's like a double-edged sword. If I just keep on buying back my own stock, when I listed it at 4, I thought that was fair value. Maybe, okay, even if you put it a bit less because of the actual market cap, maybe $3. But 80 cents, yeah, it's a bit too cheap in my view.
Mm-hmm. Are you personally buying shares?
I don't. I already own 13% of the company. I think that's quite. And I haven't even sold one share.
You own 13%.
Yes. So I don't see the point in if I believe that me and the 5 partners, 4 other partners there, which hold 13% as well. None of us have actually sold any of those shares. I think that shows enough commitment that we're not going to be running away when we hold more than 50% of the company still.
Now, finally, if you could highlight the main reasons for an investor who doesn't know anything about you guys, what would you say?
I think a very simple thing is trust is never given, it's earned. So, of course, we are new to the public space. So we've been a private company for more than 13, 14 years. And we've been quite consistent in the way that we grew the company to where we are right now. This decision to IPO was to actually grow the company further, either in the same shipbroking space or vertically, laterally into different technology, for example. So we're looking at, we are shareholders ourselves. We are looking at increasing the shareholder value. And that's why going into the public space made very logical sense to allow us to increase shareholder value for ourselves and for the public. So if you're looking at a quick buck of like trying to make it within 1 month, 2 months, I don't think this would be the best game plan for a stock like ours. But if you're looking at the long run, yeah, we're quite committed to actually see this thing through.
Okay. Andre, sorry for the technical problems. And well, it's always a pleasure to talk to you. Bye-bye. It was a pleasure.
All right, man. Take it easy. Nice talking as usual.
Bye-bye.